We are going to start today's session with a conversation with Vishesh Rajaram, Managing Partner of Speciale Invest. Vishesh, welcome to the show.
Thank you, Romana. Pleasure to be here.
All right, well, let's get acquainted. Tell us a bit about your background as well as about your fund.
So we're a seed stage fund investing in enterprise software and industrial hardware. The fund's been in existence for the last 4 years. Our first fund, the $10 million fund with a 2017 vintage, and we're now in the middle of raising our second fund. First fund, we made about 12 investments to date. We've got a couple of good exits along the way. We possibly are about 75% through. We're going to begin investing from our second fund early next year. The kind of companies we typically work sort of fall under software and hardware buckets, and over the course of this conversation, I'd be happy to talk more about that. Personally, my own background, I've been in the venture business now for the last 15 years, prior to which I was an entrepreneur and had my early career in financial services.
So talk a little bit about one stage and two geography. What do you mean by stage? So let's say in enterprise software, what are you looking for before you're willing to write a check?
Excellent question. We operate in a round of financing of $500,000 or less, which by definition is sort of pre-seed or seed, which essentially means you're talking of companies which have vintage of less than a few hundred days old. These are founders who've got an idea, who've got an insight, and we're essentially looking for founders having a founder market fit with the sort of product they want to build, and their desire to build a company or build a product out of deep insights that is reasonably unique. So by definition, we're mostly pre-revenue, we're pre-profits, and in most cases, we're pre-product. Okay.
And what about geography?
Geography, we're an India domiciled fund, so we have a little over 2/3 of our money sitting in India, and we make cross-border investments as well from time to time. So we're open to investing in the U.S. and in India. We have active investments in both geographies.
And when you invest in the U.S., I presume you are looking for companies that are going after the U.S. market, but with an Indian back end.
That's absolutely right.
Yeah. Okay. Now, you said from your last fund, you've made 12 investments and you've had a couple of exits. Actually, that would be a very good segue into where I'm going to go next. But let's actually talk about the 2 exits you had already. Talk about what they were doing, at what stage, and with what did they come to you that propelled you to write the checks, and what was the nature of the exit?
Sure. So first one was a gaming company. We invested in a company primarily because we were quite excited about the team and their insights to build a gaming engine ground up and fairly strong layers of cryptography, and they were essentially building an online poker platform. We invested in this company back in 2018. In a couple of years, I think the business scaled a little over 7 to 10x. This was an M&A offer by another large gaming company that wanted to buy into the sector, buy into the gaming base, and sort of acquire the company. So
and that was an
it's not
natural
for us to see. It's not very natural for us to see an exit that early, but I think it was the best thing to do to align with a strategic partner to sort of enhance distribution and market penetration, and that's the reason we sort of played along with the founder's decision to go sell the company.
Was it an American company that bought the?
It was an Indian company that bought it. It was actually in a local M&A.
I see. It was local M&A, okay. And what is the second one? What sector and what kind of?
Well, the second one, I'm not going to name too much of it because the acquirer is this company, but this is a company that was developing tools to enable developing 3D AR and VR content for e-commerce, and we got acquired by a large retail and commerce group.
Also in India?
No, this is also in India, but part of a global group.
So, what is your fund's investment thesis? Are you looking for unicorns, or are you trying to proactively go after these kinds of early exit opportunities? And I'll tell you where I'm coming from. In our conversations with investors, we see two distinct categories. One is the traditional venture capital world that is sticking to the traditional venture capital philosophy of chasing unicorns, going after billion-dollar-plus market opportunities, and looking to go the full length. And then there are small funds. There are a lot of small funds now. In the last 5 years, there are probably 1,000-plus small funds that have come about, seed funds, and they have various different positioning: pre-seed, seed, post-seed, pre-Series A, small Series A, all kinds of different segmentation that has gone on. There is a category of investors that are categorically going after small exits, small but quick exits. So you put in money, and within 2-3 years, you basically exit with a smaller exit, but it's a good multiple anyway. What is your fund's investment thesis?
So I think the fund's investment thesis is clearly long only. We're essentially getting to companies to sort of build value over, a 4 to 6, 7 year time frame. The couple of them that we've got in are early. They're half opportunistic, and we've sort of played along with what the founders wanted to do in these companies. So I think by and large, in a portfolio of 18, 20 companies, you're going to have a mixed bag. You'll have a few that you get out early. You'll have a few that you lose, and you'll have a few that sort of build along the way. And I think we're no different in how we're thinking about constructing our portfolio. Got it.
Can you talk a bit about your analysis of exits in India, both local acquirers as well as international acquirers, and in two separate segments perhaps?
Yeah, I think I'll have to break that down into a couple of sectors. I think we'll talk about commerce and consumption in one, and generally enterprise and technology in the other. I think companies that sort of fall in the commerce and consumption bucket clearly have had an early run. You had companies building products in that vertical about 10 to 12 years ago, and hence we've seen a variety of acquisitions, both local and international. We've also seen that international are generally more enriching than local acquisitions, but we've seen a fair amount of activity on both those sides. We now have double-digit unicorns in the country, and they've all sort of also been reasonably inorganic in the later part of their growth. As far as companies on the enterprise tech, the local acquisition opportunity is less in numbers than it is for consumption, and that's largely because a lot of the potential acquirers or players with synergies are largely in U.S. and possibly in Europe. So in those categories, you're not seeing as many exits as you have in consumption. That's largely because you've got lesser companies, and there's a little bit of a lag in when these companies started and at what point of time they're becoming mature and growing. And I think you'll begin to see some of them. Some of them are happening now. And there, I think we'll see a lot more overseas acquisitions than just local M&A.
And what about companies that are uniquely Indian? There is the enterprise software that is facing the global market. There's the e-commerce and the payment and that whole general e-commerce, digital commerce world of Paytm and so on. That's India facing. What about categories or styles of companies that are uniquely Indian? Is that on your radar? Are you observing those?
Well, if they are on the enterprise side, possibly will be in our radar. But our read of the market is that the Indian enterprise market is still a little early. And you break down enterprises, large enterprises, SMB, and mid markets. I think the SMB market and their ability to pay is still very early in the Indian market. So I mean, so we're seeing a few companies going after them and sort of going after modern trade or kirana stores and building technology stacks for them. But the monetization and mannerisms to make money is still very early.
Slow. The main issue with this, like the buying cycle is so slow, and it requires such high touch that it's not profitable to sell to that category. Yeah.
Yeah, the ACVs are also low. The propensity to pay is low. The value creation out of tech, in the order of magnitude lower than what it possibly is in Western markets. But it's early days, and I think in a few years from now we'll think very differently about it.
But what about what is your analysis of fintech, for instance, or healthcare, which are kind of big open problems for India, right? There's such little service available in general.
Yeah, I think they're both very different in their own ways. I mean, fintech. I mean, there's a large unbanked population in the country that everybody talks about, and everybody talks about how going digital and using digital wallets and using digital mechanisms to borrow, lend, and invest money. And there are a few companies that have come out and built very large base of customers and large value. The one thing to remember, however, is that fintech is a thin margin business, and you generally have to build scale and stickiness, and that's what's very key to sort of surviving in the long run. Where I think we've seen companies be very successful are the ones where they're essentially building payment platforms that support businesses to have recurring transactions, where essentially you're able to get into a company and have repeat income or SaaS-like revenues coming out of it. It's a lot more harder to make that kind of money on just retail and payments, because there the CAC and the LTVs don't often sustain in the short to medium run. Talking about healthcare, I think there's a lot of action that we're going to see out there. It's still very, very early days as far as India is concerned. I mean, the whole digital EHR or EMR infrastructure is almost non-existent at this point of time, and then I'm sure a few companies are already sort of looking to build those stacks, and there's just a lot of scope for digitalization and benefiting of that data science and the intelligence coming out of that kind of data for better healthcare.
Yeah.
We're not even scratching the surface as far as that is concerned. Of course, fintech is a little ahead. You've got a few companies that have gotten in the game early and building up. I think healthcare is still pretty much an open game to play.
Yeah. From the audience, Sridhar Raj is saying, congrats on the Scapic exit. That is a great start. Is it not? Does Shomana know? Would you like to speak about that?
Sorry, I didn't get the second part of what it was.
You have an audience question who's congratulating you on a Scapic exit and asking for more discussion on that topic.
Yeah, that was our second exit. As it is in the news, Flipkart acquired the company, and we're very happy for them and their future.
So I was actually going to go somewhere else with my question about one of your portfolio companies. Pick one that is an enterprise software company that you feel strongly about, that you think is going to be a full-scale venture-style company, and talk about
Wingman.
Sorry?
This is a company called Wingman.
Okay. Wingman?
Yeah.
Go ahead and talk about that. When did you find them? How did you find them, or how did they find you? And what did you see in them in the beginning? Where are they now? What are they doing? And what is their trajectory?
Sure. So, Wingman's a company that was founded by 3 entrepreneurs. One who'd sort of been part of an acquisition that got acquired by Google, spent time at Google, Amazon, another founder with sort of Amazon Uber, and the third founder sort of worked in an IP venture fund and worked at Goldman Sachs. And 2 out of 3 of them were in the US, and they moved back into India to sort of set up a company ground up. And they had reasonable expertise in building AI models from just the backgrounds of the large companies that they worked. And one of the sweet spots they picked up was the convergence of voice and AI, and they've gone out to build a sales intelligence product that listens into conversations between sales and customers and helps increase sales efficiency, which in other words essentially helps you prioritize sales pipeline based on intelligence coming out of customer conversations and helps you do more sales. It's sort of similar to a couple of other companies called Gong and Chorus, both Israeli US companies that are done fairly well, and Wingman then went to Y Combinator, and they're now out and they're going fairly well.
And is the conversation listening happening in a way that it's attached to a telephone line, or how is the conversation being recorded and processed?
Good question. I think this is a company that's sort of targeting a segment called inside sales, which is largely SaaS companies selling products to other companies. So they're essentially salespeople using dialers or using Zoom or using other form of conferencing tools to talk to customers.
And does that mean that you're integrating with those tools?
Absolutely.
So this is one of the areas that we are very bullish about is, there are a lot of platforms out there right now, SaaS platforms, that are kind of deeply entrenched into enterprise workflow and have lots of enterprise customers. The one that you were talking about is, going after customers that already are deeply entrenched in Zoom, for example. Maybe they're entrenched in Ring Central, and there's a whole bunch of technologies that are already entrenched. And to what extent is a company like this that you are working with leveraging that deep penetration of another platform? So, how close is the partnership with Zoom, for example? How close is the partnership with Ring Central? Is there one?
So a lot of these companies essentially build on top of distribution of some of these in terms of integrations and operate on top of the marketplaces. Companies like Zoom and a bunch of other dialer companies are now fairly standardized. In a few cases, you have API access that allows you to sort of, pick and leverage the pipeline of data that's already being provided.
Are you seeing benefits of marketplaces?
Oh, absolutely. In almost all, most of our SaaS companies, we see big benefits of, being on top of marketplaces that have a distribution base, that have API plugins that allow you to sort of integrate and expand fairly quickly.
And which marketplaces are yielding the most effectively in this case?
Well, I think it's very case specific, right? We have another company called TrueLock that's a conversational AI company that's in the wellness industry. So they're on the MindBody marketplace, for example, and MindBody, as you may know, is a large software product company that's in the wellness space, and hence already has market access and a customer base that's looking for other apps to integrate and benefit off. And we've got another one.
The one that you were talking about, which marketplace is that getting the maximum benefit from?
Well, they're not necessarily a marketplace. They're integrating into a bunch of different CRMs and dialers. You don't have to be in the marketplace. So they're not
getting marketplace effect yet?
Not yet.
So that's kind of what I was, pointing to, is that the platforms kind of need to go more aggressively towards these marketplaces. They're not quite there yet. There are more APIs to integrate than marketplaces at the moment. There are a lot of APIs, and plus there are these individual API companies like MuleSoft and SnapLogic and so on, Postman, which you can integrate through. But what is lacking actually is fully thought through marketplaces. I mean, Salesforce's App Exchange built a lot of companies and their pipelines. That effect is still fairly. There are some, like Atlassian, I think is a very nice marketplace. If you have companies that can, ride on top of that marketplace, that would be a good one where you can actually get marketplace impact in the distribution. But Shopify has it, but not as many yet. That's kind of where I was going, and I was just checking to see if you are seeing something different than what I was seeing. Okay. Is there any other companies in your portfolio or any other trends in your work that you would like to discuss before we go to entrepreneur pitches?
Well, I think we've done a host of things on the hardware side. We have a company in the robotics space called Seinler. Essentially, are building vision and brain intelligence on top of robotic arms to behave more like human hands. And that's an exciting space. We've seen a few companies in the U.S. that are building very similar tech, and we're quite excited about the future for them.
What do you do when you get a company like that? Because in the early stages, those kinds of companies take time to build their products. So when do you come in? What are you looking for before you're willing to come in?
The first thing you do is you pick up the phone and you call potential customers in your network and you try and ask them if they need a solution like this. And specific to this company, it's in the industrial automation space. So you essentially want to know if there is a need and an ROI for someone in that vertical, in that category, to even be building such a product, right? And then what you then try and do is find a few early customers that you want to evangelize, start talking about what they're looking for in the product, and then you build your initial customer profile and start building prototypes that solve the problem. And then you pick up and run, because, I mean, you can't go and build solutions unless you know what customers really want.
So you're not expecting that to happen before you come in?
Well, that's part of our due diligence, to sort of go validate the market need and some of that. We clearly don't expect companies to have products assigned customers before we come in, right? Or, like I said, a seed fund, so we come in very early. But the whole idea is that part of our due diligence is to validate the need for the tech.
Doesn't mean that a lot of seed funds want to see revenue already. There's a very large number of seed funds who already want to see revenues, which is why we ask this question: what is your definition of seed? And
yeah, I think revenue is a bonus, but we're looking for smart entrepreneurs with insights to be building products that are not easy to build.
Good, very good. All right, well, let's switch to some entrepreneur pitches.
Lovely. Thank you so much for having me around. I'll try and stay on and listen in, but great to be here otherwise.